The US Federal Reserve Chairman Jerome Powell has said that the time has come for him to cut interest rates. This move, aimed at supporting the US economy, is not just a local phenomenon. It has global implications, including right here in Singapore. With the US Federal Reserve signaling a shift towards cutting interest rate, a new opportunity is unfolding right before our eyes. Imagine buying your dream home or making a high-return investment at just the right time. In today's video, we will explore how this upcoming interest rate cuts in the US could impact the property market in Singapore. We'll discuss what these changes mean for property prices, mortgage rates, and why now might be the best time for you to take action. Hi everyone, this is Kelly from PropertyHunter Singapore and welcome back to our channel. If you're new here, don't forget to like, share and subscribe to our channel for more content on property investment, real estate trends and home buying tips. First up, let's discuss the effect of the US Fed rate. Why does this matter to us here? Well, Singapore's financial markets often take cues from the US. When the Fed cuts rates, it typically leads to a decrease in borrowing costs worldwide, including here in Singapore. This means that the banks here might lower mortgage rates, making property loans cheaper for buyers. Lower mortgage rates can significantly reduce monthly payments, making it easier to buy a home or invest in a property. Let's take, for example, in the latest home loan fixed rate of 2.88% of a $750,000 loan for 30 years, and that will incur a monthly repayment of $3,114. Let's compare with if the interest rate drops to 2%. The monthly repayment rate would then drop to $2,772 instead, creating a savings of $342 per month and a total savings of $4,104 per year. Number 2, what this means for our property prices. Let's break down what this reduction in interest rate could mean for the property market here in Singapore. Number 1, increased affordability. With reduced borrowing costs, homes become more affordable. This might lead to an increase in demand as more people find it financially viable to enter the property market. Number 2, rising property prices. Historically, lower interest rates have spurred up higher demand. As more people rush to buy, property prices can rise due to the increased competition. In a real estate market like Singapore, where space is limited and demand is typically high, this can lead to a noticeable uptick in property values. Number 3, investment opportunities. For those looking at property as an investment, lower interest rates means higher potential return. You can buy at a lower cost and potentially sell or rent out at a higher rate. Let's take a look at this chart where it shows our property prices in terms of per square foot PSF and the interest rates for the past 20 years. As you can see, after the global financial crisis that took place in 2008 to 2009, our interest rates, which is the SIBOR and SORA, this pink and black line you see in the chart, fell significantly to below 1%. This trend continued for a good 4 to 5 years, causing our property prices to increase by an incredible amount of 86%. In 2017, interest rates started increasing steadily, and our property prices growth has also slowed down as a result if you compare it to previous years. In 2020, due to the COVID pandemic, interest rate had also fallen significantly, with SORA and SIBOR at almost the same rate in 2009 and 2010. The low interest rates lasted for about 2 years until it started increasing again. This low interest rate period in just short 2 years have caused our property prices to surge to another all-time high of 54% growth. These patterns show a consistent trend. Lower interest rates can lead to higher property demand, driving up prices. I hope you guys are learning something so far. Well, before I go into the case study, please help me by liking and sharing this video and commenting below if you do have any questions. Okay, come, let's move on. To put things into better perspective, let's take a look at the case study here. The average PSF in 2009 for private non-landed residential is $923 per square foot, and it went up to $1,381 in 2012. Based on an average 3-bedroom size of about 1,200 square feet, the price of the property back in 2009 will be $1.107 million. In 2012, the price of the same property based on the PSM then will be $1.657 million instead. That is a profit of over $500,000. Let's take a look at another example of the most recent statistics in 2020. The average PSF then was about 1,585 per square foot. In just a short 3 years, the average PSF has shot up to 1,935 per square feet. Again, based on a 3-bedroom size of 1,200 square feet, the price of the property back in 2020 will be $1.902 million. After the increase, the price of the property will be $2.322 million, making the total profit of the property $420,000 in just a short 3 years. Bearing in mind that this illustration is made using the average PSF chart, there is definitely no cherry picking here. While in the real situation, the profit may be slightly lesser or even a lot more based on individual property demand. Now, with the US Federal Reserve signaling possible rate cuts, we could see similar trends unfold once more. So, what should you do with this information? With interest rate expected to drop in the next 6 months or so, do you think that the property prices then will be increasing or decreasing? Let me know in the comments below. In conclusion, for potential home buyers and investors, the current moment presents a unique opportunity. Securing a property before interest rates drop further might be a wise move. As rates drop, property prices are likely to climb, making owning a property more expensive in the future. On top of that, do you know that many banks in Singapore have already started lowering their mortgage rates in anticipation? This proactive approach suggests that financial institutions expect higher demand and are preparing for increased competition. Don't wait until the market shifts. Educate yourself and be prepared to make informed decisions. If you are keen to find out more on what and how to start your first property investment journey, do sign up for our exclusive webinar where we will guide you on navigating these market changes. In the webinar, you will learn strategies to leverage low interest rate, understand market trends, and find the best property deal that is tailored to your needs. Stay tuned to our channel for the latest updates and expert analysis on Singapore's real estate trends. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more real estate tips and insights. Thanks for watching, and I'll see you in our next video. Bye-bye!